Joining us now to discuss the crypto markets is Maple Head of Growth and Capital Markets, Quinn Thompson. Welcome back, Quinn.
Hey, Lawrence. Jen, thanks for having me again.
Glad to see you again. So, of course, we're seeing Ether jump on the news that, of this BlackRock S1. What do you make of the way the crypto markets have been responding to Ether ETF-related updates here?
Yeah, well, just start by saying what a difference of two worlds it's been since last time I was on in October. Kind of looking at the confluence of both macro and micro tailwinds coming together for the industry, and Bitcoin being up 30% plus since. So, not surprising this week that we've seen the delay of the HashDex and expect to see the delay of the Franklin Templeton Bitcoin spot ETF applications. But there continues to be very, very constructive dialogue between the SEC and issuers. Future or further S1 amendments have been filed, and we expect still very much so that this comes in January. And on the ETH side, it's just more positive news. I think, given the argument that these issuers have, is the reason that the Bitcoin spot is allowed is because there's a Bitcoin futures, and the same now goes for the ETH side. It's only a matter of time before BlackRock and others stepped in, and I think what's a little bit of a surprise to the market is how quick that's happened.
So I kind of want to get, because you mentioned it, the SEC, just kind of clear everything up for everybody. The SEC is delaying a decision on the application by HashDex to convert its Bitcoin futures ETF into a spot ETF. And it also punted, the SEC did, also punted a decision on Grayscale's attempt to do a new futures-based Ether ETF. So you think these delays, as you said, you're not surprised by this. And so what do you think is going on?
Yeah, it's really just they want to get all the applications ready for launch on the same day, like we saw with the Ethereum futures ETF about last month. And so they're pushing all those to that January date. If they delay BlackRock, they're not gonna let HashDex go, unfortunately. So it's really just an organizational administration thing, and I think they probably got clarity that the government shutdown wasn't going to happen, so they have some more time. And maybe we still see it before year end, late December, clear off the slate before the holidays. But it's just very normal course going into that January deadline.
Now, if all of these are approved on the same day, you would think that most of the funds would flow into the BlackRock ETF. What do you think happens with all of the other applications if they're all approved on the same day and that first mover advantage is taken away?
Yeah, we've seen from the Ethereum futures side, I believe one or two of those issuers actually took down their product after the first week or two, just given there weren't many flows. I think regardless, for the industry, it's extremely positive. This is like 10 plus institutional finance and sales teams going around the country and globe selling investors, asset allocators, pension funds on what crypto is and why they need to have an allocation in their portfolio. So, there'll be a couple, let's call them martyrs, who don't get the inflows, but have invested extreme amounts of time and resources into making these products a huge success and spreading the good word. So I expect, there's a couple main players. I think BlackRock's one of them. I think the Invesco Galaxy is another one of them. And then I would say, just given the large liquidity head start that GBTC has, already 20 billion in assets in that vehicle, I think those three to me come to mind. Maybe ARK 21 shares, but there's differences in these distribution platforms and vehicles across each firm.
So, speaking of which, so talk a little bit more about the lending market here, the crypto lending market. One almost thought that was over with the collapse of Celsius and things like that. No offense to Maple, but you know how it is. So tell us what's going on here.
Yeah, Lawrence. There's an old adage from Wall Street, something like when the credit markets start to thaw and open back up is when you really start to see things recover. So we're seeing that full force on the Maple front. It's definitely the new beginnings of a recovery and growth market. Lending volumes have scaled back tremendously. We just, in the last month, we crossed $100 million in total active loans on the platform. It's been a large uptick in demand and inbounds from our borrower base looking to access capital. And let me just ask, lay a few out and see if this is a bull market. We crossed 100 million in loans, onboarded and issued loans to two of the largest institutions to ever borrow from Maple, and have the largest monthly inbound onboarding requests in the past 12 months. So definitely feeling it.
So who are these borrowers? Because are they? You guys deal mostly with institutions. What about the retail investor? What percentage would you say is retail versus institutional?
Yeah, so we don't deal with retail at all. It's only a institutional platform, both on the lending and borrowing side, accredited high net worth.
To be sure, it's institution in crypto. In many cases, is retail to traditional finance. So if you had to look at it that way,
on the high net worth side, yes. As long as everyone's an accredited investor, we do have a number of institutional credit funds who have LPs, and you could call them high net worth retail on the back end of them deploying into Maple. But for the most part, we're seeing institutional allocators, that have stuck around and weathered the storm. Continuing to look for yield, and stablecoin supply has increased as well, which has been a boon of new capital into the space. So the types of players using the Maple platform today consist of high net worths, individuals accredited, and a number of financial services, largely related businesses in the space. So you can think of funds, OTC desks, liquidity providers, a few Bitcoin miners looking to borrow against their Bitcoin, and larger kind of institutions that play in this space.
All right, Quinn, you've been on the show before, so you know it's prediction time. Bitcoin, as I mentioned at the top of the show, almost touched $38,000 yesterday. DeFi Research's Marcus Thielen is predicting Bitcoin could reach $40,000, if not $45,000 by the end of the year. What do you make of that prediction? And give us a little prediction of your own.
Yeah, I don't hate that. I think we are in a very new regime for crypto markets. We've seen dramatic near-term repricing, obviously, which the market's kind of finally understanding this, and the macro is extremely supportive as well. Equities are approaching all-time highs. Interest rates have tamed. Commodities have fallen. The dollar's fallen. So these are some of the most bullish catalysts you can get for the digital asset industry from a macro perspective. And then on top of that, you have the Bitcoin ETFs coming in January. You have the halving coming first thing Q2, and these are two events that will consume, probably 2 to 3x the supply of new Bitcoin coming into the market, which is just bullish for Bitcoin miners. It's bullish for price. So I actually expect in October, I called for 38K by year end. Maybe that's a little low. I think we get a little pullback here in the near term, just given how quickly things have run. Thanksgiving's usually always a little weird time. But I think going into December, January, it's I don't think 50K is off the question.